Now we continue our conversation and go to Kevin Green here as we watch the sell-off underway. The dollar has come back. The yields have come back higher once again. The VIX has come off the earlier highs of the overnight trade. The worst of the trade is behind us for the moment. Good morning, Kevin Green.
Well, we hope so, right, Nicole? At the end of the day, we are seeing some aggressive selling to start today's session, but not as aggressive as we saw the overnight futures when they opened. Obviously, we saw a massive move to the downside here, getting towards that and actually hit that 5% overnight. What I'm kind of looking at for the longer term time frame right now, we have three gaps on this chart that has developed here. And from a technical standpoint, you would make the assumption that at some point we should be at least trying to test these gaps. So I'm kind of looking at this downside move here. That 5,000 level is going to be a very key area for us. We're below it right now. The next area I'm kind of looking at is the 4,800 level. And if we do get a bounce back over the next couple of trading sessions, given how aggressive the market has been and how high volatility has been, to the upside, you're looking at around 5,400 if you're looking at the longer term time frame. Now, on the intraday session here, 4,800 actually could be a key area here for the market to try to defend. The reason being is it kind of aligns with some key moving averages on the daily chart as well as the monthly chart. And then it also kind of washes out potentially a lot of this option structure that we're seeing at that 5,000 level. And that 5,000 level is going to be very key. There's a lot of positioning that is there. If you're just looking at the June expiration alone, that 5,000 level has around 569,000 contracts for the calls and puts combined here. And that structure is really kind of going out in time. So the market makers, dealers, those that watch options flow, that 5,000 level is going to be a critical area for us and may also stabilize us for volatility in the near term. To the upside, you're looking at 5,110 is your first area of resistance, and then 5,200 to the upside here. But once again, Nicole, 4,800's got to be that line in the sand. We got to be able to hold that here today in order for us to even try to have a glimmer of hope that some of these technicals on the longer term time frame are going to be able to hold up.
Yeah, I mean, as we see the 4,800 mark here, everybody, we saw 5,800 last week. We were close to it, I should say. We were at 57 something earlier in the week. People were surprised. You may remember we started higher in the beginning of last week, and people started to look to 5,800, and then we couldn't hold 57, 56, and here we are now below the 5,000 mark, and I think you're showing some key numbers to watch. That being said, in the long-term trend, you mentioned the 4,800 mark. What else are you looking here for? Because the downside is evident. I'm looking and I see pretty much every sector in the red, and it looks like some of the same names are in the green. The Nike, the DR Horton, the same ones that held on Friday. So the long-term bottoming trends, anything else you can add there?
Well, if you're kind of looking at the monthly chart, we've been kind of highlighting this 46.52 level. That's the 50-month simple moving average on the monthly chart. That is going to be a key area of support, Nicole. If you kind of go back and look at previous corrections or bear markets, that 50-period moving average on the monthly has been a key area of support. Now, that doesn't mean that we can't flush through it throughout the month, but you would hope that maybe some buyers will step in. We only have one time where there was a complete flush of that 50-period moving average or that 50-month moving average. And that is really looking at the 08, 09 crisis that is out there. So we're relatively close, only about 200 points, give or take, to the downside for the S&P 500. But I would maybe some buyers actually try to step in here. RSI getting to that 41.24 level on the monthly chart is also going to be another key area that we do see bounces for in the market. So can we have more downside? Definitely. But we are testing a key area when it comes to the trend line off the October 2022 lows, as well as that 50-period moving average, which we might be testing that, today, tomorrow, over the next week or so. That kind of gives you, I don't want to say confidence, but maybe some of this washout is going to be done for now. And if we're kind of talking about the risk, because obviously we have the tariff risk, the biggest risk, Nicole, for this to be prolonged is going to be credit. And that's where that 08, 09 scenario kind of comes in at. We haven't seen any type of credit blowups yet, but you're starting to see credit default swaps starting to move to the upside in price and in premium, which is not really a good sign here. High yield investment grade bonds are also moving to the upside when you're looking at that yield. So if we actually do not get a resolution over the next week or 2 weeks, we could start seeing liquidity markets starting to dry up, and then credit availability will hit the market when it comes to shipping, logistics companies, consumers like yourself and myself, and that's where this becomes a little bit more prolonged. So hopefully we find a resolution fairly quickly before this creates a credit event that may need additional or corrective actions from either the White House or from the Fed. And I just want to capstone this real quick. The meeting today from the Fed is a normal routine meeting. They meet like this every single month. So this is not an emergency meeting, and I want to be able to make sure that we set the record straight there. It's not an emergency meeting. We probably won't get any fireworks or bombshells that come out of this meeting. This is a traditional routine monthly meeting that they come together on. That's usually close to.
Great point on that as well. In the meantime, you have Jamie Dimon, Bill Ackman, Stan Druckenmiller all speaking out, sort of voicing their concerns about the tariffs, how they're being done. At the same time, President Trump saying and noting just moments ago how many countries are speaking with us now, with the United States. Japan is sending a negotiating team. So it's underway, and this is the medicine. The VIX overnight, I believe, was at 60. Now it's around 51 or so. So it shows fear in the market is not its highest point. What are you watching when it comes to the VIX?
Yeah, for the volatility index, if you kind of go back all the way to 1986 here, it's the fourth highest that we've seen in a type of cycle. And the VIX can stay elevated for a relatively long time here, but this is an outsized move. You're talking about a 7 standard deviation move, very small fractional move when you're kind of looking at the overall trend for volatility here. This is where you kind of maybe get a little bit close to that capitulation moment where everybody tries to sell everything. And that could actually be a decent buying opportunity for long-term investors. In the near term, if you're a day trader, if you're a swing trader, this is a very hard market because of the volatility so elevated, and also options are priced really high. But once again, this is kind of a generational type of an event here. And what you would like to see is volatility subsiding, and usually 80% of the time, that's going to correlate with equity markets trying to move higher. We can have counter trend rallies within bear markets as well. You have to be mindful of that. But if you're kind of just looking at these extremes, Nicole, it just kind of, it says, yes, we have an event. Once again, you don't want the credit side of this because that's where you get volatility to really, to blow out here. But if you're a longer term investor, 10, 20, 30 years, you go back in time, sometimes these provide actually decent opportunities for those that might be looking for value in the market. And I don't think you'll probably get the market to really back out of volatility until you get an announcement about either Japan, China, or the EU. Some of these other smaller countries, that's fine, right? But I think the market is really focusing on those big 3 trading partners.
Yeah, without a doubt. And Kevin, I just saw some headlines. I was mentioning some of the folks that have been voicing concerns. Mark Cuban out this morning and actually saying if Trump continues with the tariffs and Elon Musk with Doge and they continue in this way, that it is a crisis and it will be far worse than 2008, where I stood here during the financial crisis. I was announcing layoffs every single day by the major companies. Stocks dropped 50% pretty much. We did move to new highs after that Great Recession, but he's certainly sending out a warning bell, and so you could put him on the list of folks voicing some concerns. Kevin Green, thank you so much for all your expert analysis this morning. It's good to see you. Appreciate it.